So we are continuing our discussion on shareholders' equity with chapter 21. This time we will be discussing other transactions that will involve your share capital. In the previous discussions, the focus there were mostly on recording the issuance of shares. In this chapter, we will be discussing share split, which could either be split up or a split down, and the gist of a share split is that you are going to be converting your shares into either smaller shares or you're going to consolidate them into bigger shares. When we say split up, then you are going to be dividing your shares, thereby increasing the total number but retaining the total value. In share split, the total value of share capital will not change. It is simply the number of shares and the individual par value that will be affected. For split down, it's the opposite of a split up. In a split down, you will be decreasing the number of shares and consequently, you will be increasing the par value. In a split up, you are increasing the number of shares and decreasing the uh, par value per share. There are a lot of reasons for entities to decide to split up or down their shares. One reason could be to control the price, to impact the price of the shares in the market. Another reason would be to simplify or to eliminate fractional shares, and sometimes simply to uh, change the par value and the total number of shares. And aside from share split, we'll be discussing treasury shares. Treasury shares are the entity's own shares that are being reacquired by the issuing entity. Then there will also be discussion on share warrants, which we will all discuss as they come along in the multiple choice problems. Okay. Now, we are in problem 21-11, and in 21-11, what happens here is that we have a 2-for-1 stock split or share split. One share will be converted or split into two. So a previous shareholder who possesses only one share will have to surrender his loan share, and in exchange, the shareholder will receive two shares. Okay, but the total value will just be the same. The two shares will still be equivalent in total value to the one share under the old uh, arrangement. Okay, so what happened here is that there is a 2-for-1 stock split, and then there is also an increase in authorized shares from 100,000 20 par value to 200,000 10 par value share. Basically, this is the effect of the 2-for-1 stock split. Previously, our authorized shares were only 100,000 with a par value of 20, but after splitting it up into 2-for-1, total authorized shares would now be 200,000, but the par value per share would now just be 10 pesos. Okay. And we're given with the balances immediately before the stock split, and we are asked how much would be the balance of your share premium retained earnings immediately after the share split or the stock split. And the answer here, class, would be letter C. Without need for computation, class, a stock split will not affect the total balances of the individual components of your shareholders' equity. So if you look at the given the problem, before the stock split, your share premium was 150,000. Okay, after the stock split, it will remain uh, at 150,000. Retained earnings was at 1,350,000. After the stock split, it will still be 1,350,000. So the takeaway from problem 21-11 is that your stock split or your share split will not affect the balances of the individual components of your shareholders' equity. Okay, so even if you are also asked how much is your share capital, it will still be 1 million. But instead of the 1 million representing 50,000 shares outstanding, after the stock split, the 1 million will now be representative of 100,000 outstanding shares. Okay, let's proceed to problem 21-12. King Company had 400,000 ordinary shares, 15 peso par value at the beginning of the current year. During the current year, the entity purchased 50,000 treasury shares at 30 per share. Issued a 4-for-1 split and then reissued 20,000 treasury shares at 20 per share. The questions here are what amount should be reported as the remaining cost of treasury shares, and what is the number of shares outstanding at year end. Okay, so I want us to answer number two first. Okay, so to solve for outstanding shares class, it's important for you to distinguish between those that are issued and those that are outstanding. Uh, Issued shares are those that are already taken from the authorized shares, those that are being those that were already fully paid and issued to your shareholders. Okay. Generally, your issued shares would be considered outstanding as well. But it is possible for your issued shares to be reacquired in the form of a treasury share. And once they are reacquired, once they become treasury shares, they are no longer outstanding. Okay, the simplest way to understand this is to take the word outstanding very literal. Outstanding meaning standing outside, those that are still outside the entity. So the moment you issue the shares, these shares become outstanding. Okay, but the moment you reacquire previously issued shares, then they will no longer be outstanding. Okay, so for issued shares, generally, either your issued shares will be equal to your outstanding shares, or your outstanding shares will be lesser than your uh, will be lesser than your issued shares. Okay, and that will happen if you have treasury shares. If you have shares, previously issued shares that are uh, reacquired. Okay, so one way of solving this is to compute for your issued shares and then simply deduct your treasury shares. That will give you your outstanding shares. That's one way of solving for your outstanding shares. Your issued shares minus your uh, treasury shares. Okay. So here, uh, at the start of the year, we had 400,000, but during the year, the entity purchased uh, 50,000. Okay. But I do not want you to deduct yet the 50,000. I just want you to monitor how much we have issued. Okay. Our last step would be to deduct the treasury shares. Now, uh, we have 400,000, then you had the treasury shares, and later on there was a stock split of 4-for-1. So out of the 400,000 shares would be split into four. So you will have to multiply 400,000 by you have to multiply 400,000 by 4. So that means after the stock split, the total issued shares would be 1,600,000. Okay. The total issued shares would be 1,600,000. Now I want us to update our treasury shares. How much is our treasury shares? So that we would be able to get the amount that we will deduct from 1,600,000 to arrive at our answer. Okay. So did we have treasury shares during the year? Yes, we had 50,000 treasury shares. But what happened after? Okay, so 50,000. There was we had 50,000 treasury shares. This is this will also be included among the 400,000 that will be split up into four shares per single share. So before the stock split, we had 50,000 treasury shares. After the stock split, you multiply 50,000 by 4. Your total treasury shares would be 200,000 pieces. You will have 200,000 treasury shares. Okay, but after the stock split, reissued we reissued 20,000 of our treasury shares. So before the reissuance, we had 200,000. After reissuing 20,000, the remaining treasury shares would be 180,000. The remaining treasury shares would be 180,000. Okay, so as we have determined earlier, the issued shares is now at 1,600,000, and after all these transactions, our treasury shares is at 180,000. So 1,600,000 minus 180, this will give you uh, 1,420,000. Okay, so the answer for the second question for 21-12 would be 1,420,000. Now there are a lot of ways in which students can get this wrong. One way that students will get this wrong is by starting at the 50,000 treasury shares and then deduct the 20 reissued shares. They would say 50,000 minus 20, you will have 30. And it is now the 30 which they will multiply by 4 for the 4 for 1 stock split. Okay. So others would think that the remaining treasury shares then is 120,000. Why? Because they applied the stock split after deducting the 20,000 reissued treasury shares. But that's wrong because the reissuance happens after the stock split. So you multiply the 50 by 4 first before deducting 20. Okay. And another reason why students could get this wrong is by thinking that treasury shares will not be affected by stock split. Okay, that's wrong. All issued shares will be affected by the stock split, whether they are outstanding or not. Okay, whether they are outstanding or in our treasury shares. Okay. Now, why would students think? Why would some students think that treasury shares will not be affected by stock split? Why would some students think that the share split is not to be applied to treasury shares? It is because of your dividends class. Your share split and your dividends are discussed closely together with one another. And the rule for dividends is that treasury shares will not receive dividends. Treasury shares will not receive dividends. And that makes sense because if you will give dividends to treasury shares, it's as if you're just giving dividends to yourself because who is the current holder of the who who will be considered the shareholder or the holder of the treasury shares? It will just be the entity itself. So it should only be those that are being held by outside parties that will receive dividends. Okay. And since dividends are being discussed closely together with share split and other shareholders equity transaction, some students would think that since treasury shares do not receive dividends, the treasury shares will also not be affected by stock split, but that's wrong. Okay? Apply the stock split also to your treasury shares. Very important. Now, what amount should be reported as remaining cost of treasury shares? We begin with determining the initial cost of the treasury shares. And as a rule, treasury shares should be recorded at cost. Okay? Treasury shares should be recorded at cost. How much did you pay to reacquire your previously issued shares? Okay, and the problem states here that the entity purchased 50,000 treasury shares at 30 per share. Okay? And then you simply multiply 50 by 30. you would get 1,500,000. The 1,500,000 is the value of your 50,000 treasury shares. But what happened after the acquisition of the treasury shares? There was a stock split, a 4-for-1 stock split. So instead of having 50,000 treasury shares, we now have 200,000 treasury shares. Okay, but how much is the value of these 200,000 treasury shares? It will still remain at 1,500,000. Okay, so what is then the impact? Simply the per share value of your treasury share will be lower because more shares will now be sharing the 1,500,000 valuation. Okay. Uh, instead of the 1,500,000 being good for 50,000 shares, it will now be good for 200,000 shares. Okay, and you reissued, since you reissued 20,000, uh, then the amount that will be reported as treasury share should also be reduced. Okay, so but it's important for you to get the correct amount of remaining treasury shares. Yes, we have computed earlier, your remaining treasury shares is not 30,000, it's not 50 minus 20. It is also not 120,000. It's not the difference of 30,000 times 4. Okay, it is the 200,000 minus the 20,000. Okay, so uh, if the 1,500,000 is now good for 200,000 shares, that means per treasury share, there will be an assigned cost of 7.5, or simply the 30 pesos per share divided by 4. Okay, and as what we have computed earlier, our remaining shares is 100, treasury shares is 180,000, and you multiply this with the adjusted cost per share of 7.5, you will have 1,350,000. Okay. There are, of course, a lot of variations in how to solve the 1,350,000. You could try 1,500,000 multiplied by 180,000 divided by 200,000. You would still arrive at 1,350,000. Okay. So takeaway for problem 21-12, please do not think that treasury shares will not be affected by a stock split. Okay. And another takeaway is on the computation of your outstanding shares. Our simple computation would be issued minus treasury shares. Okay, let's proceed to problem 21-13. The question here is how many ordinary shares were outstanding? Okay, Bear Company issued 200,000 ordinary shares when it began operations in 2020 and issued an additional 100,000 ordinary shares in 2021. So from this paragraph alone, we should have 300,000 ordinary shares. The entity also issued preference shares convertible to 100,000 ordinary shares. Now, this is not included because as it is, these 100,000 shares are still preference. Sorry, these shares are still preference shares. They have not yet been converted. Okay, so of course they are not considered outstanding ordinary shares because in the first place they are not yet even ordinary shares. Okay. Next, in 2022, the entity purchased 75,000 ordinary shares and held as treasury. So this can be considered as a very easy question, class. You have your 300,000, the one we computed earlier, and you just deduct your treasury shares. 300,000 minus 75,000 treasury shares. Your answer here should be 225,000. Okay. Let's proceed to problem 21-14. What is the number of shares issued at year end? What is the number of ordinary shares outstanding at year end? Okay, so no problems, no problem with number one. For number two, I just again want us to solve for the number of shares issued and just deduct our treasury shares. Okay. Seco Company was incorporated at the beginning of current year and provided the following information. January 1, number of shares authorized, 80,000. Okay, take note, this is just the authorized. Okay, this is not yet issued. Okay, February 1, number of shares issued, we have 60,000. And then what happened on July 1, number of shares reacquired but not cancelled. Okay, and then a 2-for-1 share split. Okay, so we have issued shares of 60 and then we have a 2-for-1 share split. So that means our issued shares would be 120,000. Now we will be using this 120,000 to arrive at our answer number 2. We will simply be deducting our treasury shares from the 120,000 and that will give us our answer for outstanding shares. Okay, our treasury shares was at 5,000, but this will also double because of the 2-for-1 share split because as mentioned, treasury shares will be affected by a share split. Okay, so that means our treasury shares is not just 5,000 but actually 10,000. Okay, so our issued shares was 120 and then our uh, updated treasury shares is 10,000. So that means our shares outstanding would be 110,000. So for questions 1 and 2, answers are both letter A, 120,000 issued shares, and 110,000 shares outstanding. Okay, so you should be glad if you encounter these kind of questions during the examination. How many shares were issued and outstanding at year end? Okay, so at the beginning of the current year, Vay Company had 125,000 issued shares and 25,000 shares held as treasury. During the current year, the entity revealed the following transactions involving share capital. January 1 through October 31, 13,000 treasury shares were distributed to officers as part of a share compensation plan, meaning they were reissued to parties outside of the entity. So they will no longer be part of your treasury shares. They will revert back. They will form part once more as outstanding shares. November 1, a 3-for-1 share split, and then the entity purchased 5,000 of its own shares to discourage an unfriendly takeover. Okay, these shares were not returned. So December 1 is basically an additional uh, treasury shares. Okay. So we had outstanding, we had issued on 125. Uh, the January 1 through October 31 will not affect our issued because the shares that were issued there were already previously issued. Those are not newly issued. Okay. So perhaps another thing to remember, class, is that when treasury shares are reissued, they will not result in an increase to your issued shares. Okay. Uh, your issued shares will only increase if you issue previously unissued shares. Okay, so even with the January through October 31 transaction, our issued shares as of that point will still be 125,000. Okay, but what happened on November 1? There's a 3-for-1 share split. So our total number of shares will increase. We will multiply 125,000 by 3. We will have 375,000. And then no other transaction involves issuance of shares. So our issued shares here would be 375,000. And we will need the 375,000 to solve for the outstanding number of shares. Okay, and we can do that by deducting your treasury shares from the issued shares of 375,000. Okay, so let's determine then how much treasury shares we have. At the start, we had 25,000, but we reissued 13,000 to our officers. So that means 12,000 treasury shares remain. And what happened on November 1? Again, there is a share split, a 3-for-1 share split. So what happened to our 12,000 treasury shares? It will be multiplied by 3. So at this point, we have 36,000 treasury shares. Now, what happened on December 1? We have acquired additional shares. We have reacquired additional shares, so this will increase our treasury shares from 36. We are going to add 5,000. So by the end of the year, total treasury shares would be uh, 41,000. Okay, so you deduct the 41,000 from 375, you would get 334,000 shares outstanding. So the answer here for problem 21-15 is alpha. Problem 21-16, at the beginning, question here is how many shares were issued and outstanding. So same question. At the beginning of the current year, Nest Company had 100,000 ordinary shares issued and 5,000 ordinary shares held as treasury. During the year, the following transactions occurred. Okay, so 100 shares of treasury were sold, meaning we have reissued these items. This will not affect the 100,000 issued shares. This will not increase your 100,000 issued shares. Then, but the August 1 transaction will increase our issued shares because these are from our unissued shares. 10,000 unissued shares were sold. Okay, so from 100, we will now have 110. And what happened on November 15? There's a 2-for-1 share split. So our 110,000 issued shares will now be 220,000. Okay. Now to solve for the outstanding shares, just deduct your treasury shares from your issued shares. We already have our issued shares at 220. We just need to solve for our treasury shares. Our treasury shares at the start of the year was 5,000. Okay, and then what happened on May 1? We sold 1,000. So that means remaining treasury shares would be 4,000. Okay, and then on November 15, there's a 2-for-1 stock split. So that means our uh, treasury shares will be doubled. We will multiply it by 2. So total treasury shares will now be 8,000. So 220 minus 8,000, our share outstanding would be 212,000. So the answer here in problem 21-16 would be alpha. Okay, let's proceed to problem 21-17. At the beginning of the current year, Rod Company had 700,000 ordinary shares authorized and 300,000 shares outstanding. What is the number of shares at year end? Um, on January 31, there is a 10% share dividend. What is a share dividend or a stock dividend? These are dividends in the form of shares. Okay, so your shareholders, instead of receiving cash or any other asset or property, they will receive additional shares. Okay, and why is that considered a dividend? Okay, because basically you're increasing the number of you're increasing your total number of shares. Now, will that increase your ownership interest? The answer is no, because everyone will receive the same amount of increase. That means normally share dividends will not result in a change in your ownership interest. So if my ownership interest in the corporation will not increase, why will it be considered as a dividend? Because later on, when you will be receiving dividends, you will now have more dividends that will receive cash dividends. Okay. The next time cash dividends will be declared, uh, you will have more dividends that will receive uh, cash dividends because you have to remember that dividends are uh, received per share. So the more shares you have, then the more cash or property dividends that you will end up receiving. So our outstanding shares was 300, and there's a 10% share dividend. So a total of 30,000 shares will be distributed to our 300,000 uh, to the 300,000 shares held by our shareholders. So after the January 31 uh, dividend declaration, total shares now will be 330,000. Okay. Treasury shares will not affect issued shares. Reissuance of treasury shares will not also affect issued shares. The transaction that will affect our issued shares here will be the November 30 transaction, which is a 2-for-1 share split. So from the 330,000, you will have, uh, it will now be 660,000. So by the end of the year, our issued shares would be 660,000. Now, how many ordinary shares are outstanding at year end? So again, compute for your treasury shares, deduct it from your issued shares. That should give you your outstanding shares. Okay, so uh, we purchased 100,000 treasury shares, but we reissued uh, 50. Okay, and then that means we will have remaining 50,000 treasury shares, and then there's a 2-for-1 share split. That means our total treasury shares will be 100,000 again. Okay, so you deduct the 100,000 from the 660. Your outstanding shares for this problem would be 560,000. Okay, it is simply 660 minus 100. Moving on to problem 21-18, the questions here are what amount should be reported as share capital and what amount should be reported as share premium. Okay, at the beginning of the year, the balance of our share capital is 8 million. The balance of the share premium is 2,400,000. All shares outstanding at the beginning of the current year were issued for 26 a share. Okay. So with this class, you can actually compute for your issued shares class. If your total share capital is 8 million and then the par value is 20 per share, that means 400,000 shares were issued. Okay, we can be sure of that because we know that the amount that will enter our share capital account will simply be the par value equivalent of our issued shares. So there are 400,000 shares issued. Okay, and then at year end, the entity reacquired 50,000 shares at 24A share and retired them. Okay, so basically, uh, the question is asking us what is the effect of a retirement of a reacquired share. Okay, because if there was no retirement of the treasury share class, then there's no reason for our answer not to be 8 million because normally share capital should not decrease. Share capital should not decrease. Okay, but it will decrease in this problem because uh, the shares are being retired. So they will no longer be part of your issued shares. They are permanently removed from uh, circulation. Okay, and then uh, and as what I have discussed and emphasized before, if you recognize or retire shares, you must remove everything. Remove the share capital component, remove the share premium from its original issuance. Okay, but let's focus first on the acquisition of the treasury shares. How many treasury shares were acquired? 50,000. And at what price were they acquired? 24. So the total price paid would be 1,200,000. Okay, that's 50 times 24. Now, the entry there for the acquisition of the treasury shares would be debit, treasury shares, and credit cash 1,200,000. Okay, treasury shares will have a normal balance of a debit, even though it's an equity account, but technically a contra equity account. Its normal balance would be debit. Remember that treasury shares will be a reduction to your total shareholders' equity. Now, what happens if you will retire them? Okay, if you retire them, then they will cease to be treasury shares. They will no longer be considered treasury shares because they are going to be retired. But what else will happen? You will have to remove them from your share capital. You have to remove them from your share capital. And not just that, not just their par value, but the share premium from its original issuance. Okay, so we know that the shares were originally issued at 26 pesos per share. So that means the total uh, issue price then of the 50,000 shares that we have retired would be 1,300,000. And how did we get the 1,300,000? That's simply 50,000 multiplied by 26. Okay. But the question is, where will we charge this 1,300,000? Do we charge it entirely to the share capital? The answer is no. Do we charge it entirely to the share premium? The answer is no. You must simply allocate them between the par value and the excess over the par. How much is the par value? 20 per share. Okay, so 20 pesos times 50. That means out of the 1,300,000, 1 million there is chargeable to share capital. And then the remaining 300,000 represents the excess over the par. So that should also be deducted from the total share premium. Okay. So your entry there would be debit share capital 1 million, debit uh, share premium 300,000. Take note, we are debiting these accounts. Okay, and as I have told you, it's rare for you to debit these accounts, but we are debiting them here because we are retiring these shares. They will no longer be part of your share capital and share premium. Okay, and then you will also have to recognize the treasury shares. You will now credit the treasury shares, but uh, the treasury shares are only 1,200,000. Okay, so your balancing figure here will be share premium treasury shares. Okay, so your complete entry will be debit ordinary share capital. Your debit will be share capital 1 million. Debit share premium ordinary share premium from original issuance 300,000. You credit treasury shares to the recognized treasury shares of 1,200,000, and the balancing figure would be share premium treasury shares uh, in the amount of 100,000. Okay. So to answer the question, what amount should be reported as share capital at year end? The answer here will be 7 million because of the 1 million deduction for the par value of the retired shares. Now the balance of your share premium, we begin at 2,400,000. We deduct the 300,000 share premium of the retired shares, but we will also have to add the 100,000 share premium arising from the retirement of the treasury shares. Okay, so in this case, class, you can actually say that there was a gain because you issued these shares for 26 a share, but you were able to reacquire them for 24. But that gain is not recognized in profit or loss. It will just be recognized as share premium. So your share premium here will have an increase of will have an addition of 100,000. Okay, so 2,400,000 minus 300,000 plus 100,000. The share premium after these transactions will be 2,200,000. Let's proceed to problem 21-19. In connection with the retirement of shares, what amount is debited respectively to share premium and retained earnings? Uh, Rona Company originally issued 5,000 shares of 10 par value for 100 per share. During the current year, the entity acquired 2,000 of the shares at 150 per share and immediately canceled these 2,000 shares. Let's record the acquisition first. 2,000 shares times 150, you will have 300,000. So debit treasury shares and credit cash 300,000. But since we are going to immediately cancel them, we will have to recognize the treasury shares as well. So our entry will have a credit to treasury shares amounting to 300,000. Now, what else will our entry for the retirement of the shares include, or the cancellation of the shares? It will include the recognition of the shares from their original issuance. Okay, so we will remove the share capital and the share premium, but based on their uh, based on the amount that are included from their original issuance. Okay, so 2,000 times 10 par value, so we will have a debit to share capital in the amount of 20,000. Okay, and since they were issued at 100, there was an excess over par of 90. 90 times uh, 90 times 2,000, you would get 180,000. So far our entry looks like this: debit share capital 20,000, debit share premium from the original issuance 180,000, and credit treasury shares 300,000. If you look at our entry, it is the debit side that is lacking. And if you analyze this transaction, you can actually say that there is some sort of a loss because the shares were issued at 100 and you paid 150 to reacquire these shares which we just canceled. Okay. But the again, just like the gain we have in problem 21-18, the loss here will also not be recorded in your profit or loss. It will be it will be it will go to your immediately go to your retained earnings. So that's why the complete entry here is um, debit share capital 20,000, debit share premium 180,000, and our balancing figure would be your retained earnings since we do not have any share premium for retirement of treasury shares. So that's why the answer here would be Charlie. The debit to share premium is 180 and the debit to retained earnings would be 100,000. 21-20. What amount should be reported at year end? Share capital, share premiums, retained earnings. PAC company canceled 5,000 shares of 50 par value held in treasury at an average cost of 120 per share. Before recording the cancellation of treasury shares, the entity had the following uh, shareholders equity balances. Okay, so since the average cost of our treasury shares was 120, you multiply 120 by 5,000, you would get 600,000, okay, which is the value given also in the problem. So this amount will be credited, okay, since we will be derecognizing the treasury shares since they are going to be cancelled. Next is to derecognize also the uh, share capital and share premium of these shares that are going to be cancelled because when they were issued, they were included in your share capital and share premium. Since they are now going to be cancelled, they will have to be removed from your share capital and share premium. Okay, and the problem tells us that these shares were originally issued at 75. So uh, the figures here could actually be verified. The 2,500,000 represents 50,000 shares. And if you multiply that with a 50 par value, that will give you 2,500,000. Because as what we have mentioned, uh, the share capital account will only represent the par value of your issued shares. Now, your share premium is 1,250,000. This is actually your excess over the par. And how much is the excess of the issue price over the par value? 25. And how many shares does this represent? 50,000. 50,000 times 25, that will give you 1,250,000. So this information can actually be verified. Okay. But what we are after is simply the share capital and share premium of the 5,000 shares that are going to be canceled. We know that the par value is 50, so you multiply 50 times 5,000. The share capital of these 5,000 treasury shares is 250,000. And then we know that they were issued at 25 pesos above par, so 25 excess. times 5,000, that will give you 125. So far our entry will look like this: debit, share capital 250,000, and debit share premium 125,000, and uh, credit treasury shares at 600,000. Okay, but our debit is still lacking. Our debit so far is just the 250 and the 125. We just have 375. So that means we lack about 225, if I'm not mistaken. 250 plus 125, that's 375. So the 225 would be charged to your uh, retained earnings. Okay. So our share capital, instead of 2,500,000, this will be 2,250,000, reduced by 250,000 par value of the 5,000 canceled treasury shares. Our share premium, uh, it was 1,250,000, but it will be reduced by 125,000, representing the share premium of the 5,000 canceled treasury shares. And then our retained earnings, instead of 1 million, because of the supposed loss on the cancellation of the treasury shares amounting to 225, our remaining retained earnings would be uh, 775,000. 21-21. Okay, what amount should be reported as share capital? What amount should be reported as share premium? And what amount should be reported as total shareholders equity? Okay, so we'll just have to go through these transactions. Guys. At the beginning of the current year, gas company was organized and authorized to issue 100,000 shares with 50 par value. So this is basically the first year of the operations. During the current year, the entity had the following transactions relating to shareholders' equity. Okay, in this case, I think it would be better for you to journalize these transactions and simply monitor the uh, balance, the running balance after all these transactions. Issued 10,000 shares at 70 par value, as at 70 per share. We know that the par value is 50. So, debit cash 700,000, credit share capital 500,000, and credit share premium. Debit share premium, how much was it? 10,000, 10,000 times 50, we have 500. And then credit share premium 200,000. Okay, so debit again, debit cash, 700,000, credit share capital 500,000, credit share premium 200,000. Then what else happened? Issued additional 20,000 shares, this time at 80 per share. Okay, so debit, cash 1,600,000, and then credit share capital, again just the par value, so 20,000 times 50 par value, 1 million, and credit share premium for the excess of 600,000. So again, debit cash 1,600,000, credit share capital 1 million, and credit share premium 600,000. Reported net income of 1 million, so this will increase our retained earnings. Debit income summary and credit retained earnings in the amount of 1 million. Paid cash dividends of 200,000, so this would be debit. Uh, Retained earnings and credit cash 200,000. Next, purchase 3,000 treasury shares at 100 per share. So this would be debit treasury shares at 300,000 and credit cash for 300,000. Now, what amount should be reported as share capital at year end? So we only have two transactions affecting our share capital. It's the first and the second bullet. In the first bullet class, we credited share capital at 500,000. And then in the second bullet, we credited share capital at 1 million. Okay, so we will have 1,500,000. Or simply multiply the total issued shares of 30,000 by the par value of 50. Next, what amount should be reported as share premium at year end? Uh, Only two transactions affected share premium also. It's the first two bullet. The credit to share premium in the first bullet was 200,000, and then the credit to share premium in the second bullet was 600,000. So the total share premium here would be 800,000. Okay, so this is just some sort of a comprehensive problem on the basic transactions. What amount should be reported as total shareholders' equity at year end? We have our share capital of 1,500,000. We have our share premium of 800,000. Next, your retained earnings. How much is your retained earnings? You had an income of 1 million, but you also declared dividends of 200,000. So your retained earnings is at 800,000. So 1,500,000 plus 800 plus another 800. That will give you 3 million. Uh, sorry, 123 plus 800. That will give you 3,100,000. Okay, but that is not our answer, because please never forget your treasury shares. Your treasury shares is a deduction to your total shareholders equity. So your 3,100,000 sum of your share capital, share premium, and retained earnings. Deduct your treasury shares from the last bullet of 300,000. Your answer here should be 2,800,000. Okay. Last question: how much is your contributed capital? Again, your contributed capital would be your would normally be your share capital and your share premium. Share capital was 1,500,000. Share premium is 800. That's why the answer here is 2,300,000. Okay, let's have problem 21-22. Levi Company provided the following information from a comparative statement of financial position at year end. What is the number of outstanding shares, shares issued, and average price of additional shares issued in 2023? Okay. So in 20, let's answer number two, and let's answer number two first, since it's in 2022. What is the number of outstanding shares on December 31, 2022? Okay. We can compute for this. If we're looking for outstanding shares, again, it is simply your uh, issued minus treasury shares. So if our share capital is 4,500,000 in 2022, okay, and we know that the par value is 5 per share, so all you have to do is to divide 4,500,000 by 5. That will give you the total number of issued shares as of 2022. So we have 900,000. 4,500,000 divided by 5 is 900,000. Okay, and then what are we going to deduct? You will have to deduct the uh, treasury shares. And how many treasury shares did we have in 2022? As the problem states, we had 400,000 in 2022. So 900,000 minus 400,000. Our answer here would be 500,000. Bravo. Okay. Next, in 2023, the same procedure. What is the number of outstanding shares in 2023? You share capital at the end of 2023, 7,500,000. You divide that by 5 pesos, you will get your total issued shares. So 7,500,000 divided by 5 pesos will give you 1,500,000 shares. Okay, and with the 1,500,000 is our issued shares, so we will have to deduct the number of treasury shares. And how many treasury shares do we have? In 2023, we had 600. So 1,500,000 minus 600, the outstanding shares in 2023 would be 900,000. Okay. Now, how many shares were issued during 2023? Okay. Uh, just compare the issued shares in 2022 and 2023, and the difference would be the increase would be the amount of issued shares during 2023. Okay, since we did not have any retirements during the year. In 2022, our issued was 900, and then in 2023, it was now 1,500,000. That means there was an increase of 600,000. So the additional shares issued in 2023 was 600,000. Okay. Now, what was the average price of the additional shares issued in 2023? Okay, you can solve for this one by analyzing the increase or change in your share premium. How much was the share? Because the share premium gives you the excess over the par. Okay. How much was the share premium in 2022? 40,000. Okay, and then that 40,000 is for the 900,000 issued shares. What happened in 2023 is now 52,000, and this time this 52,000 is for the 1,500,000 issued shares. So there is an increase of 12 million. It's an increase of 12 million. And these 12 million came from the 600,000 shares that were uh, issued in 2023. So 12 million divided by 600,000, you would get 20. But that does not mean that the issue price of these shares was 20. 20 is just the excess of the issue price over the par value. Okay, so if the excess is 20 and the par value is 5, that means the issue price is 25. Okay, so uh, the answer in number 4 would be alpha. Okay, we have 21-23. Questions are what amount should be reported as share capital, share premium, and total shareholders equity. Okay. Uh, at the start of the year, the first year of the operations, we have authorized shares of 100,000 at 100 per share. Uh, in January 1, sold 30,000 shares at 150. Our entry here would be debit cash 4,500,000, credit share capital 3 million. That's 30,000 times the par value. And then credit share premium of 1,500,000. Okay, February 1 issued 2,000 shares for legal services with a fair value of 250. The shares on this date are quoted at 140. We will not be using the quoted price of the shares because we are given with the fair value of the services we have received. Okay, so debit expenses 250,000, and then credit share capital for the par value of the 2,000 shares, which is 200,000. So again, our entry is debit expenses 250,000, credit share capital 200,000, and credit share premium uh, 50,000. Okay, on March 15, purchase 5,000 treasury shares at the cost of 120 per share. So 120 times 5,000. This would give us 600,000. So debit, treasury shares, and credit, cash 600,000. On October 31, issued 5,000 convertible bonds at 120. The bonds are quoted at 98 without the conversion feature. Okay, so uh, debit, cash at 6 million. That is 5 million times 120%. And then uh, credit the bonds payable at its uh, fair value of 98, which is 5 million times 98. That will give you 4,900,000. Okay, and credit the balance to share premium at 1,100,000. Okay, and then remember, we will not be allocating this based on fraction because the price here is for a debt and equity. If it's for both debt and equity, priority is given to the debt instrument. Okay. Then November 5 declared a 2-for-1 share split when the market value of the share was 160. And then sold 20,000 shares at 75. Uh, at 75 per share. Okay, so the entry here would be different already because the par value will change. The par value changed when there was a stock split in November 5. Okay, so 20,000. If you notice, the issue price is 75 and the old par value is 100. As what I have told you, you cannot issue shares below their par value. But here it is not an issue because in December 15, your par value is no longer 100. As a result of the 2-for-1 split, the par value per share is now just 50. Okay. So your entry here would be uh, 20. So debit cash 1,500,000 and then credit share capital for the par value of the 20,000 shares. 20,000 shares times 50, that will give you 1 million. Okay, and then credit share premium 500,000 for the excess. Then December 31, the net income for the current year was 2 million. Uh, Debit income summary and credit retained earnings for 2 million. Now with those entries, class, we should be able to answer all the questions here. Okay, number one, what amount should be reported as share capital at year end? Okay, so uh, what transactions involve the share capital account? We have the January 1, we had the credit to share capital in the amount of 3 million. And then we have the February 1, wherein there was 50,000, was, sorry, 200,000. 200,000 credit to share capital. And then also on, uh, December 15, when we issued the shares. The credit to share capital was 1 million. So all in all, we have 3 million plus 200 plus 1 million. We will have 4,200,000. The November 5 class will not affect our share capital because it does not affect the total value of the share capital. It only affects the par value per share and the total number of shares. Okay. Next question: what amount should be reported as share premium? We have share premium was involved in January 1, issuance of the shares, and it was 1,500,000. Also on February 1, but only for 50,000. And then for the convertible bonds, we had the share premium component for the conversion privilege in the amount of 1,100,000. And then also from December 15, we have the 500,000. So 1,500,000 from January 1, 50 from February 1, 1,100,000 from October 31, and then 500 from December 15. You will have 3,150,000. Now, what amount should be reported as total shareholders' equity? So we have our share capital at 4,200,000. We have our share premium at 3,150,000. Then do not forget your retained earnings. Your retained earnings is uh, 2 million. And then do not, again, never, always remember, do not forget to deduct your treasury shares. Your treasury shares arise from the March 15 transaction, which was 600,000. Okay, so 4,200,000 plus 3,150,000 plus 2 million minus 600,000, you will have uh, 8,750,000. Okay, so the answer number three here is 8,750,000. Next, how many shares are outstanding? I want us to compute first for our issued. Uh, from January 1 to February 1, we have 32,000. And then there was a stock split of 2 for 1. So 32 times 2 will have 64. And then you add the 20, additional 20 on December 15. Our issued shares is 84. Next, compute for your treasury shares. You had your treasury shares of 5,000 on March 15, and then the 2 for 1 stock split. That means your treasury shares now is at 10,000. So 84,000 issued shares minus 10,000 treasury shares. Our outstanding shares is 74,000. Okay. So please expect shotgun problems for shareholders equity class. One problem, multiple questions. Okay, I think that will also be the case in the final departmental exams. Okay, problem 21-24. Questions are outstanding shares. Uh, Share capital and share premium. Okay, we'll answer number 2, 3, and 4 first. And just as what we did in the previous problem, we'll try to generalize these transactions. Sold 80,000 shares at 60 per share. The par value is 50. So 80 times 60, this would give us 4,800,000. Okay, so debit cash 4,800,000 and credit share capital for 4 million and credit share premium for 800,000. Then reacquired 4,000 treasury shares at 65 per share. So the answer here, this would be the entry here would be debit treasury shares and credit cash for 4,000 times 65. 4,000 times 65. That's 260,000. Okay. Then approve the share split of 541. Okay. No need for journal entry for a stock split. October 31 declared and issued a 10% share dividend when the market value of the treasury shares at uh, market value of the share is 25. Plus the entry here would be debit retained earnings, since this is a declaration of a dividend, and credit share capital and share premium. This is considered as a small stock dividend class. If it is less than 20%, it is considered as a small stock dividend, and the stock dividends are to be measured at fair value. Okay, so but the biggest challenge here is determining first how many dividends, how many shares will be receiving dividends. Okay, because take note that there was a stock split class and there was also treasury shares. Remember, the treasury shares will not receive will not receive dividends. Treasury shares are affected by stock split, but they do not receive dividends. Okay. So on January 1, we had 80 class. And then and then uh, we had 80, and then uh, there was a stock split of 5 for 1. So total issued shares at this point was 500. 80 times 5 would be 400,000. Okay. Uh, but not the entire 400,000 will receive dividends because uh, we have treasury shares of we had treasury shares before the stock split. Okay, and how much was our how much was our treasury shares? It was 4,000, but because of the stock split, it became 20,000. Okay, 4,000 times 5,000, we will have 20,000. You will deduct the 20,000 from you will deduct the 20,000 from the 400,000. That will give you your outstanding shares as of that point. Okay, so you have the 380 class. That's 400 minus 20. You have at this point your issued shares, your outstanding shares was 380, and it is this 380,000 that will receive stock dividends. Okay, and how many stocks are we going to be issuing? 10% of your 380. Okay, if you did not compute for the 380, then definitely you would get the stock dividends wrong. So 10% of 380 is 38,000. So we'll be issuing 38,000 shares. Okay. Now how and at what price? 25. So 38 times 25, that will give you 950. And it's important for you to take note of the 950 class because remember, this is a dividend. This will affect your retained earnings. The entry for October 31 is debit retained earnings 950,000, and then the par value now per share is just 10 because it was 50 before, and after the stock split it will be 50 divided by 5. Okay, so we will be issuing additional 30,000 shares multiplied by the par value of 10, uh, 380. So credit share capital for 380. Then the balancing figure would be your share premium. So 950 minus 380, there will be credit to share premium of 570,000. Okay, and then uh, next, declared and issued sorry, reissued all of the treasury shares at 30. Uh, the value of our treasury shares was, I think it was 260. Okay, so uh, it was reissued at 30. So our share, we had 20,000 shares. Originally, it was just four, but because of the stock split, it became 20. And it was reissued at 30. So 20 times 30, you will have cash of 600,000, and then uh, you recognize the treasury shares because they are no longer treasury shares, which was 265. And since we were able to reissue them at a price that is greater, the amount, uh, the balance would go to your uh, share premium in the amount of 335. Okay, so next will be the net income. The net income is debit income summary and credit retained earnings for uh, 3 million. Sorry, it's not 265 but just 260. So the credit to share premium would be 340 for the reissuance of the treasury shares. Now, what is the number two first? What amount should be reported as share capital at year end? So what affected our share capital here? It's just the January 1 transaction, 80,000 times the par value 50. And then also the stock dividend on October 31, which created our share capital in the amount of 380,000. So the answer here in number two would be 4,380,000. Next, what total amount should be reported as share premium? What transactions gave rise to share premium? We have the January one, which was 800,000, and then the October 31 transaction for the stock dividends, which was 500, uh, which was 570,000. Okay, and then the share premium from the reissuance of the treasury shares, the amount of 340. Uh, your total share premium would be 800 plus 570 plus 340. That will give you 1,710,000. Now, what is your total shareholders' equity? You have your share capital, your share premium. Then you add your retained earnings. How much is your retained earnings? Will it be 3 million? No, because again, you declared dividends in October 31, uh, which will have a debit to your retained earnings in the amount of 950. So your retained earnings is actually 2 million 50 only. It's the income of 3 million minus dividends of 950. Now, do we have to deduct your treasury shares? Supposedly, that's the rule. That's the reminder always. Never forget to deduct the treasury shares. But here, we do not have any treasury shares because they were reissued afterwards. Okay, so we'll just have the share capital, share premium, and your uh, retained earnings. So share capital is 4,380,000, share premium is 1,710,000, retained earnings is 2,050,000. So your total shareholders' equity would be 8,140,000. Now, what is the number of shares outstanding? We started at 80. Then we to solve for our uh, issued shares first. 80, and then we had the stock split of 541, so it became 400, and then the stock dividend of 38,000, we will have 438,000. Then supposedly we are going to deduct our treasury shares to arrive at our outstanding shares. But here, since all treasury shares were just later on reissued, our issued shares will be equal to our outstanding shares will be equal to our issued shares, which is 438,000. Now, I think it's very important for you to review this problem, class, especially on the impact of your stock dividends. Okay. The discussion on your retained earnings, which will include discussion on the different kind of dividends, will be done in a separate video.